Hello, welcome back to Financial Freedom with Jewel. Today we're going to talk about velocity banking and really what it is and how it works. Oftentimes you're told, okay, take out a line of credit. Let's say you don't have a line of credit. Let's say you're just beginning to understand and know that you want to pay down your bills in record time, but you don't know how. In this way of doing things with velocity banking, you have to be strategic. In that I mean, when you have cash flow, you need to use that to target debt, whether it be credit card debt, whether it be student loan debt, whether it be maybe you gotten into some car loans. Maybe those are things you're looking at. But let's just look at this scenario here. These people right here, they bring in $49.77, great income. Their expenses are $38.42, $3,842. But something you don't know, because I haven't broken this budget down, is that they actually have their insurance, their streaming services, their mortgage payment, their car loan, all that's calculated in that 38.42, and also fund money. You guys, something I learned about velocity banking is I like it because we allot what we call fun money. Those are things like going to the movies, getting your nails done, going out with the guys, going to concerts and things like that. Only because if you allot something as you're paying down your debts for entertainment, you are more than likely going to stay on that program, which means you're going to be disciplined because you know that I'm not waiting for 2 or 3 years in order for me to see a return on paying down my debts. Every single month, you're able to allocate things you enjoy doing while you're paying down your debts. Velocity banking is simple. It's working off the cash flow. In this, you have to have cash flow. I have videos that'll break down that also show you how to find cash flow. Many folks, they don't understand how their money works. And remember, I always say, if you don't tell your money where to go, you're gonna wonder where it went. This requires being strategic and being intentional and also being disciplined. But you have the fun money. So in this scenario here, look at this, you guys. They have $1,135 left over at the end of every single month. But when you're not disciplined, that $1,135 you will never see because you're thinking, oh, I have it in my bank account. I'm good. I know it's there. But for some reason, I think it's human nature, we tend to spend it and we blow it and we're like, I only have $10 left. We're going to be strategic with that. We've taken out our fund money. I'm going to also offer another caveat. When you do your fund money, don't just say, okay, I got $200 a month that I'm using for fun things that I enjoy. Take that $200 out the bank, put it in the envelope. Use the envelope, use it cash. The reason why I say this is because if you keep going back and dipping in that account, before you know it, maybe you spent $400 or $500 on entertainment. If you've allotted $200 a month, stick to that. When that envelope is empty, it is empty. If you choose to go ahead and say, hey, I have extra left over into the month, great, carry it over. But I'm always going to encourage you to take out an envelope because that way, when the envelope is empty, you cannot go back in there. Okay, look at this scenario here. Let's say they have maybe, let's say $10,000. Okay, let's say you have a $10,000 credit card. You're paying $250 a month because typically credit cards are running from 19.99 upwards of 30+% interest rate. You are making those bare minimum payments. On a $10,000 credit card payment, you're gonna probably pay that car off and maybe the card off maybe in 7-8 years while they've collected all that interest from you and you paid off those minimum payments. No, there's a better way to do it. Let's say you have a credit card debt of $10,000. Okay, instead of you just making the bare minimum payments, why don't you go ahead and allocate that $1,135 directly towards the principal? Let's say your payment is what, $250 a month. Take that $250, inject that into your payment. That's going to be required to be due. But the additional out of that $1,135, apply that directly towards your principal. You guys, you can knock that debt down in 8 months, not 8 years, not allowing the banks to collect all that extra money and interest. That is how the banks make money. They charge you to borrow their money and they super inflate it. That way, when it's all said and done, instead of you paying $10,000 for the debt, you've given them in excess of maybe $6,000. You guys, you have to stop that because that's not going to help you. So don't feel like, well, I only make a little bit of money. If you have cash flow, any addition you have left over, you want to inject that directly into your debt. If you are a high dollar earner or if you're just a mid-size, just standard across the board earner, it's okay. It works either way. And I've learned something. People that make a whole lot of money, they spend it too. They're not wise with their spending either. So I'm going to encourage you, if you can take a line of credit, if you have cash flow, You can do this as well. And also, as I stated before, make sure you're intentional about your fund money. Put it in an envelope. Don't leave it in your bank account. Have an envelope, have cash, so you're spending in cash. So when the envelope is gone, guess what? No more spending. But the good thing is that if you will sit there and you'll apply these principles, whether you have a line of credit or not, you can still work with what you have. Also, remember something, you guys. Slow and steady wins this race. You're not trying to say, I have to do this overnight. You got in debt probably over a series of years. It's going to take you time. But with velocity banking, if you're disciplined, if you are strategic, and if you are sick and tired of being sick and tired, you will work this plan. Now, for those that can take out a line of credit, keep on watching. I have videos for that. You can actually also pay down debt in record time. We're talking student loans, car loans. You guys, I paid off a car loan that was a 4-year term in about a little under 2 years. You can do it, you guys. And also, don't think because you don't make thousands of dollars and have thousands of dollars in cash flow, you can't do it. If you have $200 in cash flow, you can still do it. Also, consider doing maybe a side hustle. Side hustles, you guys, they bring in extra money. That side hustle can be used to directly be injected into paying off your debts. There's a way to do it, you guys. But the banker's way, it's not going to be your way, only because as you are paying him back, he's gobbling all that money in interest. He's charging you, and you're paying him double, just borrowing his little bit of money. So let's flip the script. Let's do the velocity banking way. It works every time. But they say it's not math, not magic, it's just math. Till the next time, to the next video, I'm Julia, your financial freedom friend. I'm here until you win. We'll talk to you soon. Bye-bye.